This is not a drill. What I'm about to show you will shake the motorcycle world to its core. Harley-Davidson, the company that built the American dream on two wheels, just reported the most catastrophic financial collapse in its 120-year history. We're not talking about a bad quarter or temporary setback. We're talking about a complete financial meltdown that threatens to end one of America's most iconic brands forever. The numbers are so shocking that Wall Street analysts are calling it the end of an era. Revenue has plummeted 60%. Sales have crashed 53%. The company has withdrawn all financial guidance because management literally cannot predict if they'll survive the next 12 months. But here's what the mainstream media won't tell you. This isn't just about poor sales or economic headwinds. This is about decades of catastrophic management decisions, a complete disconnect from their customer base, and financial engineering that's finally catching up with them. Let me break down these numbers, because they're worse than anything you've seen in motorcycle industry history. Harley-Davidson just reported a 60% drop in motorcycle revenue for the fourth quarter. That's not a typo. 60% in one quarter. Unit sales crashed 53% compared to the same period last year. Global shipments fell 17% for the entire year, totaling just 148,862 bikes. That's 11,600 fewer motorcycles than the previous year. But here's where it gets truly catastrophic. The Harley-Davidson Motor Company division, which makes their iconic combustion engine motorcycles, reported just $420 million in revenue for the fourth quarter. That's a brutal 47% decline year over year, coupled with an operating loss of $214 million. Even their electric motorcycle division, Livewire, which was supposed to be their salvation, sold only 33 motorcycles in the first quarter of 2025. 33 bikes. For an entire quarter, Harley's stock has plummeted 35% since September 2024. The company's market cap has evaporated by billions. And now, credit rating agencies are questioning whether Harley can service its debt obligations. This isn't just a rough patch. This is financial carnage on a scale that threatens the company's existence. Here's something that will blow your mind. As of June 2025, more than 60,000 new motorcycles sit unsold in dealerships across America. Some of these bikes have been sitting for nearly 300 days without a single buyer. Walk into any Harley dealership today, and you'll notice something eerie. Silence. Gone are the weekend crowds and bustling sales floors. Many showrooms feel like ghost towns. Dealers are desperate. They're offering zero-down financing, steep discounts, and promotional events that would have been unthinkable just 2 years ago. Nothing is working. The inventory glut is so severe that Harley has been forced to cut production and reduce shipments to dealers. But even that isn't enough to clear the backlog of unsold motorcycles gathering dust on showroom floors. This inventory crisis represents hundreds of millions of dollars in capital tied up in products that nobody wants to buy. And every day these motorcycles sit unsold, they lose value and become harder to move. Here's a factor that's absolutely crushing Harley that most people don't understand. Tariffs. Harley already faces a brutal 56% tax on motorcycles exported to Europe. That single policy decision has devastated their European market share, which has collapsed from 5% to just 2%. But it gets worse. Proposed tariffs on components imported from China, Mexico, and Canada could cost Harley up to $175 million annually. Since Harley sources components globally, even though they moved some production to Thailand, they're still vulnerable to supply chain tariff costs. This creates a death spiral. Higher costs force higher prices, which reduces demand, which increases inventory, which reduces cash flow, which limits their ability to invest in new products or compete effectively. Harley is caught in a tariff trap that makes their motorcycles less competitive globally, while simultaneously increasing their manufacturing costs domestically. But the financial numbers only tell part of the story. The real crisis facing Harley-Davidson is demographic, and it's been building for decades. Harley's core customer base is aging out. The average Harley owner is now over 50 years old, and younger riders simply aren't replacing them at the rate Harley needs to sustain the business. Why aren't young riders buying Harleys? Simple. They can't afford them. Harley raised prices while knowing that consumers were tightening their spending due to economic uncertainty. It backfired spectacularly. Even with financing offers, Their motorcycles are now out of reach for a new generation of riders. A basic Harley Sportster now costs over $15,000. Their touring bikes run $25,000 to $35,000 or more. That's luxury car money for a motorcycle. And young adults facing student debt, high housing costs, and uncertain job prospects simply can't justify those expenditures. Meanwhile, competitors like Honda, Yamaha, and Kawasaki offer reliable, powerful motorcycles for half the price. Indian Motorcycle is eating Harley's lunch in the American cruiser segment with better value propositions. Harley doubled down on expensive touring and trike segments because they offer higher profit margins per unit. But this strategy has left them completely vulnerable when demand softens, which is exactly what's happening now. The root of Harley's problems isn't just market conditions or demographics. It's decades of catastrophic management decisions that have finally caught up with them. Instead of focusing on building motorcycles that people actually want to buy, Harley's leadership became obsessed with financial engineering, stock buybacks, and quarterly earnings manipulation. Between 2012 and 2020, Harley spent over $7 billion on share buybacks while underinvesting in product development, manufacturing efficiency, and market expansion. They essentially bought back their own stock instead of building better motorcycles. This financial sleight of hand created the illusion of growth and profitability, while the underlying business deteriorated. Now that illusion has collapsed, revealing a company that hasn't innovated meaningfully in decades. Current CEO Jochen Zeitz has been trying to turn the company around since 2020. But the problems run so deep that even dramatic restructuring efforts haven't been enough to prevent this financial collapse. The company has withdrawn all 2025 financial guidance because management literally cannot predict what will happen next. That's not uncertainty, that's panic. Here's something that doesn't get enough attention. Harley's dealer network is collapsing. Dealers are the front line of motorcycle sales, but they're getting crushed by unsold inventory, reduced foot traffic, and financing costs on floor plan loans for motorcycles they can't sell. Many Harley dealerships are family-owned businesses that have represented the brand for decades. These dealers invested millions in facilities, equipment, and inventory based on projections that turned out to be catastrophically wrong. Now they're facing a perfect storm: high interest rates on floor plan financing, mountains of unsold inventory, and customers who aren't buying motorcycles at any price. Dealership bankruptcies have started, and more are coming. When dealers fail, it creates gaps in Harley's distribution network that are expensive and time-consuming to rebuild. This isn't just about individual businesses failing. It's about the collapse of Harley's retail infrastructure, which took decades to build and will be nearly impossible to reconstruct if it's allowed to disintegrate. Harley bet heavily on electric motorcycles as their path to the future, spinning off LiveWire as a separate company and investing hundreds of millions in electric technology. The results have been absolutely catastrophic. LiveWire sold only 33 motorcycles in the first quarter of 2025. For context, that's fewer electric motorcycles than some individual Harley dealerships sold in gasoline-powered bikes on a busy weekend just a few years ago. LiveWire's revenue dropped 42% year over year in the first quarter, with an operating loss of $20 million. For the year, management expects LiveWire to lose between $59 and $69 million. This isn't just poor performance, this is complete market rejection of Harley's electric strategy. The problem is that LiveWire motorcycles are expensive, have limited range, and don't offer the emotional connection that traditional Harley riders expect. Meanwhile, younger riders who might be interested in electric motorcycles see LiveWire as an old company trying to be cool and failing. Harley's electric strategy has consumed massive resources while generating virtually no revenue or market acceptance. It's a billion-dollar bet that has failed completely. While Harley has been struggling, their competitors have been eating their market share aggressively. Indian Motorcycle, owned by Polaris, has been gaining ground in the American cruiser market by offering motorcycles that look and sound like traditional American bikes, but with better reliability, more features, and competitive pricing. BMW has dominated the touring segment that Harley once controlled, offering sophisticated motorcycles with advanced technology, superior comfort, and proven reliability for long-distance travel. Even in the cruiser segment, companies like Honda and Yamaha offer motorcycles that provide the Harley aesthetic at half the price with twice the reliability. Harley's response has been to raise prices and reduce model variety, exactly the opposite of what the market demands. They've essentially ceded entire market segments to competitors while retreating to an ever smaller niche of traditional American cruiser buyers. This competitive retreat has created a vicious cycle where reduced volume leads to higher per unit costs, which necessitates higher prices, which reduces volume further. One of the few bright spots in Harley's recent performance has been Harley-Davidson Financial Services, which has been profitable while the motorcycle business collapsed. But even that success has become a liability. Harley just announced a $5 billion deal to sell its portfolio of motorcycle loans and a stake in its financing arm to investment giants KKR and PIMCO. While this deal provides immediate cash, it also represents Harley essentially selling off one of its few profitable divisions to raise money to keep the core motorcycle business afloat. This is what companies do when they're desperate. They sell their best assets to fund their failing operations. It's a short-term solution that weakens the company's long-term prospects. The financing deal might buy Harley time, but it doesn't solve any of the fundamental problems destroying their motorcycle business. Beyond the financial disaster, Harley is experiencing a cultural collapse that threatens the brand's identity. For decades, Harley-Davidson represented rebellion, freedom, and American authenticity. Riders didn't just buy Harleys, they joined a culture, a lifestyle, a brotherhood. But that culture has been commoditized, corporatized, and diluted to the point where it no longer resonates with new generations of riders. Modern Harley marketing feels desperate and inauthentic. They're trying to appeal to everyone while satisfying no one. The result is a brand that has lost its soul while failing to gain new customers. Meanwhile, other brands have developed their own authentic cultures and communities. BMW GS riders have adventure touring culture. Ducati has racing heritage and Italian style. Even Indian Motorcycle has managed to create a compelling alternative to traditional Harley culture. Harley's cultural decline is harder to measure than financial metrics, but it might be more dangerous to their long-term survival. Harley's collapse is happening during a broader motorcycle industry crisis, but their problems are much worse than their competitors. The overall motorcycle market has declined, with industry-wide challenges including high interest rates, economic uncertainty, and changing consumer preferences. But while other manufacturers are managing these challenges or even growing despite them, Harley is in complete free fall. Companies like Triumph, BMW, and Honda continue to gain market share even as overall demand softens. This proves that Harley's problems aren't just about market conditions. They're about company-specific failures that have made them uniquely vulnerable. The motorcycle market will recover eventually, but there's no guarantee that Harley-Davidson will survive to participate in that recovery. So what comes next for Harley-Davidson? Several scenarios are possible, and none of them are good for traditional Harley loyalists. Best case scenario: Harley completes a dramatic restructuring, slashes costs, reduces their model lineup to profitable core products, and slowly rebuilds market share over many years. This would require perfect execution and favorable market conditions. More likely scenario: Harley continues bleeding cash, closes factories, reduces dealer networks, and becomes a much smaller company focused on a narrow niche of traditional cruiser buyers. Think of this as managed decline. Worst case scenario: Harley runs out of cash, faces bankruptcy, and either liquidates or gets acquired by a larger company that strips the brand for parts. This seemed impossible 5 years ago, but now looks increasingly plausible. The financing deal with KKR and PIMCO buys time, but it doesn't solve the fundamental problems. Harley still makes motorcycles that are too expensive for most buyers, appeal to a shrinking demographic, and face brutal competition from brands that offer better value. What we're witnessing isn't just the financial collapse of a motorcycle company, it's the end of an American icon that defined freedom and rebellion for generations. Harley-Davidson's problems didn't happen overnight. They're the result of decades of management decisions that prioritize short-term financial engineering over long-term brand building and product development. The company got addicted to high-margin, high-priced motorcycles sold to an aging customer base, while ignoring the need to develop products that appeal to new generations of riders. Now, they're paying the price for those decisions. Revenue has collapsed, inventory is piling up, dealers are failing, and the brand's cultural relevance is fading rapidly. The numbers don't lie. A 60% revenue collapse, 53% sales decline, and complete withdrawal of financial guidance paint a picture of a company in terminal decline. Can Harley-Davidson survive? Maybe. Can they return to their former dominance? Extremely unlikely. What's certain is that the Harley-Davidson we knew, the company that represented American automotive excellence and cultural rebellion, is already gone. What remains is a struggling manufacturer trying to figure out how to sell expensive motorcycles to customers who increasingly have better alternatives. The king is dead. The American motorcycle industry will never be the same. But here's what I want to know from you. Do you think Harley can turn this around? Are you a Harley owner worried about resale values and parts availability? Or do you think this collapse was inevitable and overdue? Drop your thoughts in the comments. Hit that subscribe button for more honest analysis of the motorcycle industry. And remember, in times of crisis, knowledge is power, and denial is deadly. The motorcycle world is changing forever. Make sure you're prepared for what comes next.